Bought your Florida home more than 3 or 4 years ago, there is a very good chance you are sitting on more money right now than you think. Money that could buy your next house, fund a rental property, or pay cash for a vacation in the Keys, or somewhere else. I don't know. And it's just sitting there, doing absolutely nothing for you. I'm talking about your equity. The average Florida homeowner right now has around $290,000 of equity built up into their homes. Here's the part that should really get your attention. That number is actually shrinking. Florida homeowners just saw the biggest equity drop of any state in the country over the last year, almost $30,000 gone from prices cooling off. So the longer you sit on this and do nothing about it, the more of that money quietly evaporates. So the question isn't, do you have equity? The question is, do you know how to actually turn it into your next house without first selling it or without losing the current low mortgage rate that you have, and also without making a mistake that will cost you thousands of dollars at the closing table? That's exactly what I'm walking you through in this video. Every option, real numbers, and a specific Florida move at the end of this video that almost nobody outside of this state knows about. And it could save you thousands of dollars every year as long as you own your next home. All right, let's get into it. If you're new here, I'm Joe Mortgage Guy, your mortgage guy. And I help Florida buyers and sellers make sense of this type of strategy and this type of decision every week with no fluff, just real numbers, and also the real process on how to do things like this. Now, I do have a quick disclaimer before we get started. I'm going to walk you through the mortgage side of this in detail. But for the tax side, like the capital gains, those, that kind of thing, always consult with a CPA for specifics for your situation, or an attorney, because your situation is going to be very different from your neighbor or from this example that I'm going to share with you. Now, if this is useful, please do me a favor. So please subscribe, because I'm going to do videos like this every week. So yeah, let's get into it. Let's talk about how you can actually use the equity into your home the right way. So what is equity? All right, let's start simple. Equity is just the difference between what your home is worth today and what you still owe on it. If your home is worth $500,000 and you owe $250,000, well, you're sitting on exactly $250,000 of equity. But here's the number that actually matters for this conversation. It is the tappable equity. That's the amount you can actually borrow against while still keeping a healthy cushion. Usually around 20% of your home's value is ideal, which is what most lenders require to leave in the home after you take out the equity. And some banks will go as high as or as low as 10%. Nationally, the average mortgage homeowner has about $307,000 in equity, with roughly about $195,000 of that considered tappable. In Florida, homeowners are averaging around $290,000 in equity right now. Statewide, we're talking about roughly $11 trillion in tappable equity sitting around untouched across the entire country, and it's not getting used for nothing. Now, why is this urgent instead of just nice to know? Well, it's because Florida is actually the state that just posted recently the largest year-over-year equity decline in the entire country. Close to 29,400 average drop in equity and value, driven by that price cooling we've talked about in previous videos. Now, prices aren't crashing, but like we talked about, they're cooling off slowly, which means the equity clock is no longer just ticking up for you automatically. If you've been telling yourself, I'll tap into that later, well, later is quietly getting smaller, unfortunately. So the real question is, how do you actually turn that number that's on the paper into a down payment or a full purchase on the next property, your next home or next investment property? There are four main paths, and they are not created equal. So we'll go through each one with some rate examples right now and what it could look like in this market. Okay? So the first option is called a HELOC, Home Equity Line of Credit, HELOC. Think of it like a credit card secured by your house. You get approved for a credit limit based on your equity, and you only pay interest on what you actually draw. Right now, HELOC rates, they're averaging around between 7 to all the way up to 10%, right? Now, that depends on the lender and your credit profile. The appeal is the flexibility. You can draw exactly what you need for a down payment on the next house or whatever you want to use the money for. And if you don't use the rest, you're not paying interest on it. The catch, HELOC rates are variable, meaning they can move up and down over the life of the loan. And most lenders, like we said before, they want to keep about 20% of equity cushion in your current home. So you have that. The second option, it's a home equity loan, slightly different than the HELOC. Now, it's the HELOC's basically little cousin. Instead of a line of credit, you get one lump sum with a fixed rate and a fixed monthly payment. Now, this one is easier to budget around if you're on a fixed income or if you just want the peace of mind of knowing exactly what your payment is going to be. Current rates on home equity loans are running a bit higher. Okay, you're looking more like 8-9% on the low end, all the way up to about 14% on the high end. Of course, that depends on the term, etc. Now, it's slightly more expensive, but you know exactly what your payment is going to be every month for the life of that loan, which, again, a lot of people find easier to plan around. And they're also budgeting for a second payment on if they're getting a new place. So that makes it a lot easier and a lot better to take on. The third option is a cash out refinance. This one replaces your entire existing mortgage with a brand new one that's bigger, but you pocket the difference in cash. Here's the thing you need to know before you even consider this option. If you bought or refinanced in the last few years, there's a real chance that you're sitting on a mortgage rate that's well below today's market. Because right now, current 30-year refinance rates, they're running around 6.7, 6.8, all the way up to low sevens. So if your existing rate starts with a 3, 4, 5, or any low 6, a cash out refinance means giving up that rate entirely and resetting your entire loan balance at today's higher rate. Now, it's not just the amount you're pulling out. So for a lot of Florida homeowners, that math simply doesn't work. And this is the single most common mistake I see people make when they're doing refinances. Now, you always want to run this comparison before you sign anything. And sometimes this is still an option for most people, and it still makes sense depending on what their situation will look like. The last option is a bridge loan. This is the option built specifically for the I want to buy before I sell type of scenario. A bridge loan is a short-term financing that lets you use the equity in your current home to buy the next one without having to sell first or qualify for 2 full mortgage payment in the long term. The rates on the bridge loans, they're running higher, of course, somewhere around 8-9% on the low end and up to about 12 to 13% on the higher end, plus origination fees, appraisal, title, and closing costs. It's getting a whole nother loan. All in, you're typically looking at somewhere between $14,000 to $28,000 in total costs over a period of 6 to 12 months, depending on how long you need that bridge and that time to buy the next property. It's not cheap, But if you're in a competitive market and you cannot afford to make your offer contingent upon selling your current home first, this can be the difference between winning the house that you actually want or losing it to a buyer who's not going to have an offer that's contingent. Quick way to think about which one fits you. If you're buying and selling around the same time and just need to bridge the gap, that's your bridge loan. If you're keeping your current home as a rental and buying a new primary residence, a HELOC or a home equity loan might be your best option. So you don't, mess with the actual existing rate on the current property or either property. If your current mortgage rate is already close to today's market, well, a cash out refinance might be worth a serious look because you're simply down to one loan instead of two loans. All right. So here's the Florida only sort of move that I talked about earlier. Okay. This is the part I promised you, in the beginning. And if you take one thing away from this video, I want it to be this, because it is very unique to Florida and it can be worth thousands of dollars a year, every year, for as long as you own your next home. It's called a homestead portability. Okay, it's part of the Florida Save Our Home program. Quick background on that. If your current house is your primary residence with a homestead exemption, okay, Florida caps how much your taxable assessed value can increase each year. Even if your market value jumps a lot faster, over years of ownership, that creates a growing gap between what your home is actually worth and what you're being taxed on. That gap is real money, and it is portable, which is a great thing. Here's how it works. When you sell your current Florida homestead and buy a new one, you can transfer up to $500,000 of that accumulated tax savings to your new home if your new home's value is equal to or higher than your old one. You can port the entire benefit. If you're downsizing to something less expensive, you still port a percentage of it. But it's good to know that's possible. Now, why does this matter for this video specifically about using your equity to buy another home? Because when you're running the numbers on whether to buy that next property, most people only calculate payment and forget about the property taxes entirely. They forget taxes is part of your mortgage payment. And it's not just the principal and interest. And in Florida, if you don't port your Save Our Home benefits or that exemption, your new home could get reassessed at full current market value, which can mean a property tax bill 2, 3, or 4 times higher than what you were paying before. That's a monthly cost that can completely change whether that new purchase actually makes sense or if you're going to be able to actually afford it. But here's the timeline you need to know. And this is important. And there's a real deadline. And you have 3 tax years from when you leave your old homestead to establish a new and port the benefit with you. And once you're in your new home, the portability application, it's Form DR 501T, has to be filled, and it has to be filed with your new county's property appraiser between January 1st and March 1st of that year that you're claiming it. If you miss that window, you could lose the benefit entirely and get stuck paying full tax price. So if you're using equity from your current home to buy another home, this is not optional homework. This is a phone call to your county properties appraiser's office that could be worth thousands of dollars a year. And it needs to happen at the right time during the transaction or right after the transaction is closed, not later on. Okay. Now, here's the actual step-by-step process on exactly how to put all of this together. All right. Let's put it all together into an actual process from start to finish. Step one, get a real value on your equity, not a Zillow guess or a Zillow's estimate or whatever they call it these days. An actual comparative market analysis from a realtor or get an actual appraisal. This tells you exactly what you're really working with before you make any decisions. Step two, get pre-approved for whichever access method you're going to use, whether it's the HELOC, the home equity loan, the cash out refi, or the bridge loan, based on what we just walked through. This also tells you your real usable number after all the fees and required equity cushion that the lender requires, not just the main figure. Step three, run the full monthly comparison, not just the mortgage, everything included, all the way up to the insurance. The new mortgage payment plus whatever equity product you use and its payment plus, again, the property tax number, insurance, all of that. You want to factor all of that into it. Plus, make sure that you account for the Save Your Home benefit or the exemption benefit. Okay? Step four, decide your sequencing or the order of operation that you're going to do this. Are you buying first and selling after? Are you using the bridge loan or the HELOC to bridge the gap? Or are you selling first and buying after, which is simpler financially, but means that you might need temporary housing in between? This decision changes everything about which product from segment 2 earlier that we talked about that could make sense or not. Step 5, if you're keeping your old home, loop in your insurance agent and your lender early, because a second property changes your debt to income ratio and you want zero surprises when your new purchase gets to underwriting. Step number 6, if you're selling your old home, file that portability paperwork the moment you close on the new home. Don't wait. Put it on your calendar right now. Whatever your closing date is, make sure you do it then, because that March 1st deadline, it does not move for anybody. Step 7, close, move, and actually use the equity you worked hard for instead of leaving it sitting in the walls of a house doing absolutely nothing for you while it's slowly shrinking with the market. Now, who is this for? Who does this make sense for? And who should pump the brakes? This strategy makes real sense if you have significant equity and stable income to support carrying 2 properties, for example, if that's what you want to do, even if it's briefly or long term. You're clear on your sequencing. Buy first or sell first before you start shopping. And if you're organized enough to actually hit that portability deadline instead of letting it go to waste, okay? Or missing out on it altogether. You should slow down and talk to someone first if your current mortgage rate is well below today's market, and a cash out refi would mean giving that up, because there's almost always a better option in that case. Your income or job situation, if it's not fully stable enough to comfortably carry 2 payments even for a few months, or you haven't run the numbers to know exactly what property taxes and insurance on the new place is going to look like, because that's usually where the surprise comes at the end, not the mortgage itself, you definitely want to pump the brakes a little bit, okay? Now, every one of these paths, the HELOC, the home equity loan, the cash out refi, the bridge loan, and whether portability applies to your situation or not, depends entirely on your specific situation and specific numbers. Your rate, your equity, your timeline, the type of property you're looking for, where that property is located, or even the property that you own currently and whether you're going to keep or not. My point is, it's not a cookie cutter solution. You need a customized plan of action for you. That's exactly what I walk through on my free strategy calls. It's a no pressure. We talk about the real numbers, your actual situation, so you know which path would actually make sense for you before you commit to anything. You'll find the links in the description. There's a number on the screen here if you'd rather call or text me directly. Also, if you want to see if you qualify for a HELOC, I have a link in the description where you can find out in less than 3 minutes. And once approved, you can actually get the funds as soon as 5 days if you want to do that. Anyway, if this helps you understand what's actually possible with the equity you've already built in your home, hit subscribe so you don't miss the next video that I drop. I'm going to be dropping these once a week and eventually twice a week when I get a little bit more time. If you're looking to buy, selling both, whatever it is, I can help you strategize what's the best way to go about doing it. And then if you know someone who's not sure whether they should buy or sell or keep or not, and they're a little bit confused and need a game plan, share with them this video. And until then, I'll see you in the next one. All right.